Hey, what's up everybody? Jesse here, mortgage broker with Home Loans of Idaho. I wanted to share with you something that we just went through on helping a client buy their home here in the Boise area. So we have a client moving in from out of state, and our focus today with this video is how to structure the loan and making sure that we can get your loan closed in the first place and not just leading with the lowest interest rate and the lowest payment. That's something we all want, and that's all great, obviously. One of the best things about mortgages nowadays is that getting the lowest rate for your financial situation is just all kind of done in the fold. It's all done automatically. So the focus is getting the loan done in order to get the loan closed for you. And this goes for both purchase loans and refinance loans. So we had a client, they are trying to place an offer on a brand new build from a builder. This builder so he's already been pre-approved with me. The builder has a requirement that any buyer needs to get pre-approved with their preferred mortgage lender to make sure that the deals are doable and get it done. So that preferred lender comes back to the client, says, hey, we can't do the deal the way that you want it to be done. You would need to come to the table with about $100,000 more in order to do this, because the guidelines of what you are wanting to do, it won't allow it. We can't get it approved that way, but here's the solution, which is great. That lender coming to the table with another solution. So the buyer calls me back and says, hey, we got a problem. Maybe we have to go buy another house. So I ended up calling the sales manager for the builder and kind of plead our case, saying, look, I'm a mortgage broker. I've been in the business for 20 years. We don't just send out pre-approvals. And even though that this is a unique situation from the buyer standpoint, we've already matched up the guidelines and making sure everything moves forward efficiently, and we can actually get everybody to the closing table and get the loan done. So they give us the exception, they accept the buyer's offer, and we move forward. So good news, everything's moving forward. The loan has been structured, been sent to underwriting, and appraisal's been ordered and all that other fun stuff. So the preferred lender hears that this buyer his offer has been accepted, and we're moving forward with the loan program. So keep in mind, this preferred lender never pulled credit. So he was never able to really get into the financials and get everything put together. What he did was just look at the situation and says, hey, we can't do it. So he closed the door right there and just leaned on that second option to get the deal done easier. In his case, the lender's case, not ideal for the buyer. And that's one of the things that we focus on here, is tailoring the loan to your financial needs and try to meet your goals to get the deals done and get you to the signing table. So when the preferred lender heard that we were in contract and moving forward, that preferred lender called the buyer and said, hey, I hear everything's moving forward for you. Come to find out, we can do this. So what ends up happening is this preferred lender ended up shifting the conversation to, we can give you a better rate than Jesse's giving you, and we can give you lower closing costs. So here's the problem with that. He still doesn't know the situation. He just saw this as we're moving forward. He lost out on an opportunity, and instead of focusing on, hey, how are we going to get the deal done? Can we even get the deal done? And then in the process, give you a better situation. They just leaned into, I can get you lower rates and lower payments. And we all want that. We all want the best rate possible. We all want the lowest mortgage payment possible. And with today's guidelines today's regulations and mortgages, all mortgage professionals have to give you the lowest rate possible. And then just kind of build that in with the loan. So it's either, here's our par interest rate, Do you want to buy down the interest rate? And those are conversations that you'll have on every loan. If it's a purchase loan or a refinance loan, it doesn't matter. So with that said, the buyer calls me back and says, hey, this other lender is saying this, that, and the other. And I'm like, that's great. Here's the problem. He's not even producing the guidelines. He's not even coming back to the table to say, this is how we would get your loan done. This is how we're going to put it together to make sure you can actually close on this loan without, kind of a last minute oopsie where, and I've seen this before. I've been doing mortgages for 20 years where the buyer's been pre-approved, everything's moving forward. And then about a week before you're closing, that loan officer calls and says, hey, we need $10,000 more to close the loan, or we need this, or we need to do something. And it puts buyers and homeowners looking to refinance in a very bad situation because their back's up in the corner. Okay. So it's either cancel the deal or come out of pocket with more money, and it puts the potential client in a worse financial situation because you weren't even really you weren't planning on coming out of pocket with more money because you thought the deal was put together and all the disclosures were telling you, hey, this is where we're at, this is the money we need for down payments and stuff like that. So my advice is, when you're talking to a mortgage professional, a mortgage broker, and they're only using buzzwords, lowest interest rates, lowest costs, stuff like that, that's all fine, and that's going to become that's very automatic in the loan anyways. What everybody needs to focus on is the structuring of the loan. Everybody's financial situation is different. There's different guidelines depending on what loan program, what level of money that you're trying to offer or finance. Are you doing a jumbo loan? Are you doing a conventional loan? Are you trying to utilize a conventional or FHA or a VA loan program? What are your credit scores? So there's a lot that goes into getting a deal done. And working with a true mortgage professional, they're going to lead with structuring. Because even if another lender is offering you a 4% interest rate, if you can't close the loan, the 4% interest rate means absolutely nothing at the end of the day, because you're not even getting into the home anymore. It's what do they call it? A fugazi. It's just words. It's just buzzwords. So that's my message for you guys today. If you've tried to buy a home, or if you have tried to refinance your home and you were declined, or if you were just told, hey, we can't do this for you, seek out another opinion. Call other mortgage companies. Mortgage brokers are a very good resource. We have little overlays on the loan programs, and what an overlay is basically added rules that the lender applies. So if here's our rules as a mortgage broker, and you go to a retail lender or another platform, they're going to say, okay, well, we're going to add these hurdles onto the guidelines for clients to get a loan. So that difference makes it harder for a client to get pre-approved for a loan. And that could be stricter guidelines, more financial assets, higher credit scores. There's a lot of things that go into mortgages, and just because you were declined on your first option, that doesn't mean looking for a second or third option is going to lead you down the same path of results and not getting your home. So my name is Jesse, Home Loans of Idaho, mortgage broker right here in Boise, Idaho. If you have any questions, comment below. And remember, subscribe to my channel. It helps get the message out and help more people become homeowners or current homeowners getting into a better loan. Have a great day.